Hey everyone, welcome back to Corporate Decoder. Today, Stone Point Credit Income Fund filed an 8K reporting an unregistered sale of equity, and I am seeing a key point about how they are raising money. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is selling shares directly to investors, and it seems like they are avoiding the usual public market route for this specific fundraising. So what is happening here? Well, this is a document that companies have to file with the SEC, which is the US Securities and Exchange Commission, to let everyone know about important events that happen. Think of it as a public announcement system for big company news. The main event we are looking at happened on the 17th of April 2026. This is when Stone Point Credit Income Fund, or the fund as they call it, did something significant with its shares. The filing is about an unregistered sale of equity securities. In simple terms, they sold shares of the company, but not in the way you might typically see on a stock exchange. Instead of going through a public offering where anyone can buy, they sold these shares directly to a select group of investors. So on the 1st of April, the fund decided to sell a bunch of its common shares. The exact number of shares, 478,484.049 to be precise, was finalized on the 17th of April. They sold these shares at a price of $24.7607 each. This all happened through what are called subscription agreements, basically contracts between the fund and its investors. The total amount of money they raised from this particular sale was over $11.8 million. This is significant because they are selling shares directly to investors, which is different from selling them on a stock market like the New York Stock Exchange. This is often done to raise capital quickly and directly from investors who are willing to commit to buying the shares. The reason they might do this is to avoid the costs and time involved in a public offering, or perhaps they have specific investors in mind who are comfortable with this type of transaction. Now, why was this sale unregistered and how is that allowed? Companies have to register their stock with the SEC before selling it to the public. This process is like getting official permission and involves a lot of paperwork to make sure investors have all the necessary information. However, there are exemptions, and this filing points to those. They are using Section 4, Add 2 of the Securities Act, which generally allows companies to sell securities to sophisticated investors without full registration. They are also following Rule 506 of Regulation D and Regulation S. These rules provide a framework for companies to raise money privately. It means they are not offering these shares to just anybody. Think of it as a private club for investors. This is a crucial part of why these exemptions apply. The fund explicitly states they did not advertise these shares widely or try to sell them to the general public. This is a key requirement for using these private offering exemptions. They didn't send out mass emails or run ads saying, "Buy our stock." To make sure they meet the requirements for selling without full registration, the fund required investors to confirm they were accredited investors. This is a designation for investors who meet certain income or net worth thresholds, meaning they are considered financially sophisticated and able to bear the risks of investing in unregistered securities. So, the fund got assurances from these investors that they met these criteria. It is also worth noting that this company identifies as an emerging growth company. This is a classification for companies that have total annual gross revenues of less than $1.235 billion. These companies can take advantage of certain relaxed reporting requirements for a period after their initial public offering. It suggests they are likely a younger or smaller company still in a growth phase. Interestingly, this filing also notes that they do not have any securities registered under Section 12B of the Act, which typically refers to listing on a national securities exchange. This reinforces the idea that Stone Point Credit Income Fund is not traded on a major exchange in the way most investors are familiar with. Looking at this filing, it signals that Stone Point Credit Income Fund is actively raising capital through direct placements, targeting specific investors who qualify as accredited. This is a common strategy for funds and companies that want to fund operations or expansion without the complexities of a public offering. The amount raised, over $11.8 million. Is a healthy sum for this type of private placement. It shows the company's ability to attract investment directly. The risk here is that these unregistered securities are not subject to the same level of scrutiny as publicly traded stocks. Investors need to be very comfortable with the company's management and business prospects because there is less public information and fewer regulatory protections compared to listed securities. For the company, while efficient, this method of fundraising can limit the pool of potential investors. Ultimately, this filing highlights a key fundraising mechanism for Stone Point Credit Income Fund. We see them successfully bringing in over $11.8 million by selling shares directly to sophisticated investors, using exemptions that allow them to avoid the full registration process. It is a move that offers efficiency but important for investors to understand the nature of these unregistered securities. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord in the description.